But let's put the focus now on some of the big numbers that we've been watching as far as earnings go. Ujjivan Financial saw net interest income rise over 60% in the fourth quarter, and all the provisions and write-offs did see an uptick this time. It was a strong quarter for the NBFC, with profits showing a threefold jump to 65 crores. We now have Sudha Suresh, MD and CEO at Ujjivan Financial, joining in. Ms. Suresh, thanks so much for joining in. Always good to have you on, especially on the back of numbers like these. A very, very strong quarter for the company. If I may just ask you to take us through some of the highlights. What worked for you this time around? Because optically the numbers look extremely strong.
Good morning. Yes, and this has been an excellent quarter for us, where we have closed with a PAT of 64.9 crores, and that's the result of a combination of factors which include increased business growth. It is also a part of flat OPEX for the quarter, and it has also reduced credit costs for the quarter. And also some income which has come on the PSLC and securitization in this quarter. Overall, all these have contributed to an excellent quarter closing, and overall we have closed with 64.9% on the quarter. Having said that, I think also on some other key parameters, we have seen that we have had the highest disbursement during this quarter, and we have closed the OSP at 7,560 crores. On the GNPA also, we have had significant improvement, where from the last quarter of 4.2, we have come down to 3.6%. And again, on the cost of funds for the financial year 2017-18, we have seen a reduction of 140 bips. So from 10.4 in the previous year, we are down to about 9% in terms of cost of funds. This augurs well for us, and we do expect the benefits to continue and a further reduction in this financial year 19. We have also done the entire rollout of our branches as per our plan. So we have 187 full-fledged asset banking outlets this year, and we would see that this gets ramped up to almost about 475 banking outlets by the end of FY19.
All right. So undoubtedly strong across several parameters. You pointed out the way, your cost of funds have come down. We'll get into that in a minute. But in terms of the segmental breakup between the disbursements that you had this time round, if you could just take us through where you saw the traction, and now that we go into fiscal 19, a lot of these shocks are now behind us as far as demonetization, GST and the like go. Where are you seeing the trends? Where are the positive trends emerging?
So yes, as you were asking for disbursements, we have seen the ramp up across all businesses. So for example, our group loan disbursements for Q4 were at about 1,910 crores, and that's clearly an up, QOQ at 1.8% and YOY at 56.3%. In the micro individual loans, we did about 174 crores, which is again a 54.2% over YOY and 31.6% QOQ. On the MSE, we again had almost about 31.9% increase QOQ, and on affordable housing, it was again at around 39%. So overall, disbursements at 2,262 crores in this quarter was the highest across these 4 quarters. And the year we ended with a disbursement of about 8,052 crores. Going forward, we do see this ramp up happening, as we have indicated that we are looking at about 30-35% CAGR year on year. We do see the business growth happening and disbursements ramping across all these verticals, be it group loans, microfinance, MSE and housing. And we do see this growth, moving up at almost 30-35% year on year.
All right, 30 to 35% loan growth expected going ahead as well. Especially, I wanted to ask you about the affordable housing disbursements, because you saw quite a strong uptick in that this time around. Since you saw an increase, if you could give us some color in terms of ticket sizes as well, did you see an increase, and where regionally are you seeing the most traction?
So in affordable housing, we have almost average ticket size, which we have seen for Q4 at about 7.2 lakhs. And, overall for financial year, the average ticket size is about 6.3 lakhs. Having said that, we are seeing the uptake in smaller towns, and we are ramping up our business because our branches are spread across 24 states. We are seeing that across many of these states and many of the small towns wherein we have our branches, we will be ramping up the affordable housing business.
All right, and in terms of asset quality then, if we talk about the kind of risks that you're seeing to asset quality, I understand that you've brought it fairly under control, 3.6%, that's versus 4.2% quarter-on-quarter. Sequentially, your GNPA number has come down. That said, your net NPA number saw a bit of an uptick. Help us understand what played into this, and where really are you seeing the pressure as far as asset quality goes?
So very clearly, this has been the impact of the demon, which we have taken quarter on quarter in the earlier 3 quarters, and significantly, therefore, the credit costs are down in this quarter, and that is where you see the difference in terms of the GNPA and NNPA for the quarter as well as for the whole year. So we saw this reduction to 3.6% for GNPA, and the NNPA has come down from 1% in Q3, it has come down to 0.7%. So going forward also, because largely the impact of demon has been taken care of, we do expect a strong reduction in the GNPA, and we would look at almost sub 2% in terms of the GNPA for financial year 19.
All right, sub 2% is the expectation on the NPA number. Is there any concern that in areas where you are actually increasing your presence, for example, affordable housing, there were some reports of a possible rise in delinquencies in this space. Do you have any concern in that regard? Which are the areas where you're seeing the risk at the moment?
So in housing, we would like to indicate that we are largely expanding in areas where, the housing, other HSCs don't have an exposure. And these areas are green, and then therefore we do expect the risk to be far less, and there would not be the kind of what do we call overlending or overlaps, and we do expect that the affordable housing will grow comfortably and with a good credit quality.
All right, ma'am. The other thing I wanted to ask you about was the cost-to-income ratio, because we saw a very healthy trend there. It came in at 57%. That's down from 76.7%. What played into this, and any guidance that you have, any targets as far as cost-to-income goes going ahead as well?
Okay, the cost-to-income ratio in this quarter has definitely been, significantly impacted, and there is also some amount of adjustment that we should see for income from securitization, which has played in this quarter. But overall, what we have seen is for FY18, we have a cost-to-income ratio of 67.1%, and this being the first year of a foundation for the bank, this has gone up from the previous year of 53.8%, largely on account of the transition costs and laying the foundation both in terms of infrastructure, technology, and people ramping up for the SFB business. But when we look at the operating and cost-to-income ratio for this financial year, since this year we continue to convert many of our asset branches into full-fledged banking units, and our investment in technology remains across channels, ATMs, etc. So we will look at more or less, a cost-to-income ratio which could rise during this financial year over the next 4 quarters. But post that, in fact, in the next 3 years, we do expect the cost-to-income ratio to significantly decline. And at 3 years, we would almost be dipping down to around 50%.
All right, so can expect an uptick in fiscal 19 because of the kind of expansion plans that are on the cards. I also wanted to ask about the NIMs, because we saw very strong expansion there as well, 11.6% versus 8.6% on the NIM front. What is the estimate that you're working with? Do you think that you can continue this kind of a run rate on the margin front?
Yes, 11.6 was for the quarter, and as indicated, there were certain specific items which came in this quarter. However, for the financial year, we are looking at a NIM of 10.6% for FY18, and we would say that it would largely be around the same for financial year 19.
All right, fair enough. Ma'am, just another word, as far as the expansion goes, you give us a sense of how you plan to ramp up your offering. Could you tell us if you have any sort of regions that you have in mind? Will this still be to underbanked segments, or will you be ramping up presence in cities, metros, tier 1, tier 2 cities as well?
So definitely we have a mix of all the three, because as you know that as we convert our branches, asset branches into full-fledged banking outlets, parallelly we are also having the URCs, which is the unbanked rural centers, which is our foray into the rural areas, and this is as per RBI guidelines. So right now we have about 47 URCs, and we would be ramping this totally to about 120 URCs over the financial year 19. And since we already have a large presence in the urban and semi-urban areas, so our business would ramp up across all these pieces, and that is where probably we would have almost a holistic growth across urban, semi-urban and rural areas.
All right, ma'am. And just a last question. Cost of funds, you actually brought it under control this time around. It actually came down in the quarter gone by, and that's quite a surprising thing considering the trends we've been seeing. But looking at fiscal 19, there is a lot of concern, not just for your company, for the industry as a whole, that cost of funds will be going up. What are the numbers that you're working with? Do you think that there will be some sort of an uptick?
Yeah, so the cost of funds did come down from 10.4 to 9% during this financial year. And in the financial year 19, we still feel that there is some scope for reduction in cost of funds. As you know that we replaced largely the legacy loans which were high cost with, ramping up our deposits, and this will continue for this financial year. So we do expect definitely the cost of funds to go down further for this financial year, and post that probably sort of stabilize. So we do expect almost a 75 to 80 bips decline in cost of funds.
All right, expect a further decline as far as cost of funds go. We leave it at that. Thanks so much, ma'am. That's Sudha Suresh of Ujjivan Financial Services, taking us through a very, very strong quarter from the company gone by. But in fact, keeping it with earnings, it was a strong quarter for Titan.